today on Commodity Central, we put the spotlight on currency because dollar continues to gain not just versus the Indian rupee but against most other emerging market currencies. And several factors are aiding the move. Let's discuss them one by one. One, of course, is higher interest rates in the United States. If the Federal Reserve maintains a hawkish stance, US Treasury yields will increase, which will make US dollar denominated assets much more attractive to investors versus other emerging markets. Economic data from US also continues to remain very resilient. Strong GDP growth, robust labor market conditions and resilient consumer spending still continue to instill confidence in the US economy, and this also helps in boosting dollar's appeal versus other emerging market currencies. Apart from this, in times of economic uncertainty and political turmoil globally, investors tend to prefer dollar as a safe haven asset. In fact, increased appeal of the US dollar has also led to FII exodus from India. FII sold over 3 lakh crore worth of shares in 2024 versus just 16,500 crores in calendar year 2023. To discuss all this and more, we now have Mr. Naveen Mathur, Director, Commodities and Currencies at Anand Rathi, now joining us. Mr. Mathur, thank you so much for taking your time out and speaking with us here on ET Now. And Rupee saw the biggest depreciation in the month of December in over the last 2 years. Help us understand what really led to the move and what's the outlook going forward. Is this Rupee depreciation expected to accelerate going forward?
Thank you very much. And wishing all the viewers and to the crew and to yourself a very happy new year. Definitely, Rupee has been the story for the past couple of months, I would say last 2 or 3 months, largely because of the depreciation against the dollar. We started the year at around 83 against the dollar, 83.23 against the dollar. And we closed 2024 calendar year at around 85.70, 85.65 levels. Now, the major reasons what you mentioned are absolutely correct. There has been a resilient economy now building up in the US and therefore the appreciation in the US dollar. Largely, the rupee depreciation has been relatively because of the strength in the dollar index. Now, if you see the dollar index starting off from the year in 2024 was around 104, 105. It came down to 101 levels. And then again, it is currently at around 108.34. Now, there has been expectations in 2024, first half of 2024, that the inflation is getting controlled. And therefore, the monetary easing would be there. The Fed would be dovish, not hawkish. And they would cut the interest rate, the Federal Reserve rates. That didn't happen post the expectation coming out from the Fed chairman that in the next year the federal rate would be projected to be cut by only or slashed by only 2 times, which may be 50 basis points against the expectation, which was 4 cuts, leading to a kind of cut the Federal Rate Reserve coming down by around 100 basis points. So one is that particular reason of rupee gaining, or I would say the dollar gaining strength and rupee depreciating. But mind you, the domestic factor also contributed to an extent. Our GDP numbers for the last quarter, which came out, were not too great as per the expectations. The trade deficit numbers are also becoming some kind of a concern. So all those factors have led, plus at the same time, I would say the demand, the dollar demand from the importers also have led to the rupee slide from around 83.23 levels at the start of the year to approximately 85.66 or 70 levels right now. So these were the major fundamental reasons. But I would say the rupee still is a better currency against the dollar than other emerging market currencies. Means we year on year, if you talk about 2024, the rupee declined against the dollar by around 2.9% against other currencies, which have gone, I would say, declined against the dollar to an extent of 4 or 5% also. So I think 24 has been pretty volatile for the currency markets, both on the side when it became clear that the Federal Reserve would now be hawkish, not so much of dovish stance. And therefore, These are some of the fundamental factors which I would say have led the rupee downfall against the dollar.
So those are some of the reasons why rupee continues to depreciate against the US dollar. But Mr. Mathur, do you think Reserve Bank of India can do anything or intervene in any form which could meaningfully impact and lower the kind of depreciation that we have seen?
Definitely, yes. Means the armor which RBI has today means I would take you to 2013 when the Fed announced the taper tantrum. They wanted to bring back the normalcy on the monetary policy. And at that particular time, the RBI reserve, the foreign exchange reserves of the country were not too great. Today, if we talk about the foreign currency reserves, RBI, which holds, was approximately $705 billion in the last week of September. We are currently at around $645 billion as of December 20th. So there has been a cut in the foreign currency reserves, and therefore we feel that the RBI must have intervened. We have seen from $705 billion to 644, and therefore it feels like that the RBI must have intervened, and they must be intervening because they will not like the rupee to depreciate to a large extent. To some extent, rupee depreciation is good if the global economy is picking up in terms of the exports. But we being largely an importing country, particularly for the energy resources which we consume, it would not be good for the country for the currency to depreciate largely. But then I think 84, 85 levels would be some.
Understood. So that's the word coming in. But Mr. Mathur, if you can hear me, you did talk about balance of payment and trade deficit has also widened in the month of November. Help us understand what kind of risk does this pose to balance of payment situation, and is this expected to worsen in the coming couple of quarters?
That the rupee should stabilize. I think what I heard, which is scheduled for this particular fiscal as far as the deficit numbers are concerned, I think it's a concern, but it's not too great a concern, keeping in view the resilient Indian economy, the consumption factor, the domestic markets, and all those things. Let me say this, within the emerging markets, we are one of the best spots, the brightest spots for people to look into. Means although the FIs have pulled out their money, that is also one of the other reasons for the rupee depreciation. But as far as the economy, as far as the political standing of the country is concerned, we are pretty much better than other countries. Means China also, if you see, has not been able to pick up the economy over the last 2 or 3 years. So I think in the broader spectrum of things, we are still better off, and therefore it is a concerning number. Would definitely be a concerning number as far as the trade deficits are concerned. But it is not that I would say that it will not be that kind of a fear factor for the policymakers to see India as a story about. So I think we still are better than any other country across the world as far as the developing markets are concerned.
At that point, rupee is depreciating against the dollar, but as compared to other emerging markets, India is better off. But do you expect the trend to continue going forward? And if you can give us a ballpark range of where rupee versus the dollar is headed for the rest of 2025?
I think 85, 50, 86 would be the outermost limit for the rupee to depreciate against the dollar. We also need to understand that the yield on the US Treasury bonds have risen to about 4.6% from about 3.7%, which were there on the 8th September 2024. So I think the rupee should stabilize around 86 to 85 levels. And that is where the expectations. We don't think that the rupee should be I would say crossing the limits of around 86.50 levels in the near future.
Understood. So apart from that, also wanted your thoughts on FII outflow. Now, relative attractiveness of the US dollar is increasing, and that has led to FII outflows as well. What do you think? Where is FII outflow headed, and do you believe this is expected to continue going forward as well?
No. I don't see it. The affirmative answer is that the India, we still maintain a very, I would say, a positive outlook on the Indian economy. The inflation is under control. The macroeconomic numbers, in spite the GDP and the trade deficit numbers, are not very appreciative. But then I would say that the other economic numbers are pretty much holding up, be it manufacturing or be it the services or the core industrial numbers. So I think, except for the capex, means the private sector needs to come up with the capex investments now, with the government doing its bit. So I think all those factors would maintain India in a very, very sweet spot against the other countries. But at the same time, I would say the other emerging markets like Vietnam and all have been some kind of an interest for FIIs over the last couple of years, and that can be the competitive countries for India for getting the FII flows. But I would say in the whole space, India would continue to be the predominant choice for the FPIs or the FIIs to invest and to be part of the story, the growth story for the country.
To be an attractive destination when it comes to investment choice. Mr. Mathur, thank you so much for taking your time out and speaking with us here on ET Now on a whole host of issues, from FII exodus to the depreciating rupee and what's the outlook going forward.